I run the website Sentiment Timing with Woody Dorsey, and what our kind of basis of the whole service is that human behavior is the key determinant of the markets. And something that Kurt had mentioned before, the presenter before us, is that he was going over all of the technical indicators that are there, and had mentioned that it's they're all based off of price, and he's 100% correct on that. And that is a little bit something that we do different, because our indicators are based off of human emotions, and it's all based off of sentiment and what Woody has with his proprietary sentiment database, and that's really what we do with our newsletters. And what we believe is that human beings in the markets make mistakes, and there's methods of measuring the markets in order to take advantage of the mistakes. And what we're going to look at is how to do that in our webinar today. So first, we want to start off with how sentiment timing started. And I started following Woody Dorsey when I was a financial planner, and after reading his book, I have had another website that was geared strictly, with the individual traders, and I read his book, and I found it fascinating how accurate a lot of his calls were. So I knew that he primarily did all of his most of his information was geared towards the institutional investor. And I decided to give him send him an email to find out if he'd be interested in kind of bringing it more towards the retail trader or the individual investor. And that's pretty much how sentiment timing started. And we started it in May 2014. And we provide near-term analysis on the S&P 500 through Woody's proprietary sentiment data, through his technical timing indicators. And then what we do is we do combine that with what Kurt was saying with the regular technical analysis. So we have 3 different ways that we're able to kind of judge the market and figure out what directions it's going to be going to. So with that, what I'm going to do is pass this over to Woody, let him do the talking, and I'll just move the slides over. So without further ado, here's Woody Dorsey.
Hi, can you hear me okay?
Yep.
Okay, so let me start with the Trunity theory. I know people find theories boring, but this is the fact of how markets work. This is how markets really work. They work because markets are made up by human beings. I mean, on the 7th day, God did not create the stock market. Markets are just a reflection of human behavior. So therefore, if we study human beings, we can study the markets. In fact, it's an exact mirror, and this simplifies everything about the market. And according to biology and science, every human being has 3 basic brains, and they correspond to 3 functional activities, which translate in the markets to the psychologicals, the fundamentals, and the technicals. So I'm just following the facts here. Okay, let's go on a little further to the next slide.
Okay, it's on there now.
So as Gary was saying, is that behavioral finance, which is the new paradigm in economic thought, which now you can use for the markets, is that basically people make mistakes. Markets are not rational. So you look for human errors. That's the whole point of behavioral finance, and it's the whole point towards successful trading. So we look at errors, and sentiment is certainly part of that, but also our technicals and also what people think of as fundamentals, and that's the basis of Trunity theory. All right, let's go a little further. Okay, so people are fascinated with sentiment, and we're going to spend a lot of time on sentiment today. It's not the only thing that I do, but it's important to recognize, as Gary said, doesn't have to do with price. Technicals are price. Fundamentals are stories. They tell stories all day long on TV. Those are stories. What price does, the high, low, close bar, is the basis of all technicals. But what about the third brain or the third reality of the markets, the psychologicals? It has a lot to do with sentiment, how people feel about the market. So it's important to realize that this is a completely different lens. And when we add this in, and we'll show some examples, it gives you a much more powerful forecasting methodology. Now, this is not a magic system. It is a component. It's a key indicator of markets. But I've spent 30, 40 years looking at this, and I want to share a little bit more about it with you so you get a sense of exactly what it is. Let's look at the next slide. So again, markets always have this irrational element, and we need to understand that. And we'll look at errors. Now this stock market sentiment that I've been collecting for over 30 years, it's a daily process of people. Can you hear me?
Yep.
Okay. So what's interesting about this sentiment is that I've been doing it in the same way for a very long period of time, so it's very stable. And unlike some other sentiment measures, it gives some very extreme readings, which is very useful, like a 0% bullish or 100% bullish. So sentiment is the missing link of market analysis. Most of Wall Street focuses on fundamentals. Some people just focus on technicals, but there's also the psychologicals or sentiment. Let's go to the next slide. Let's go to the next slide.
Oh, it's there already.
And let's go to the next one then. Number 7.
All right. Are you not seeing it, Wood?
I don't see number 7, but it's
Well, 7
maybe
was that's what you're just wrong.
Well, then go to the next one. It's a diagram that just gives a sort of a picture of this whole idea of distilling down all of the opinions to come up with a number every day, the sentiment number. Can you see it?
Yep.
Okay, I don't see it on my screen, so. But at any rate, this idea of the sentiment, remember, it is only data, but it is an important piece of data, and we'll show you how to interpret it. So all of these things come down from these listening posts into a sentiment number for each day that is based on the day's trading, and that goes into a database, and that database goes into the charts, which we're going to show you. Okay, let's go to the next one. Let's go to the next slide.
Yeah, it did. I did already.
Okay, I see number 8 on my screen here. So the next one should be the chart of the sentiment, the actual sentiment with the price history. There it is. So this is a snapshot of the S&P 500 with some highlighted days of very extreme sentiment. It's very interesting to see that, gee, when sentiment is really low, that there's a potential for the stock market to be making a low. What is that? That's an error. When people are bearish, should you get short? No, it's an error. The same thing. When sentiment, an individual day of very high sentiment occurs, it can often be near a price high. That's an error. It's a psychological error. This has nothing to do with relative strength or key reversals or Apple's earnings coming out or anything. This is just pure sentiment. This shows you the power of psychology in the market. Now remember, we're looking at a bunch of days here, the price bars. Every price bar has a sentiment associated with it. Very often there'll be something like 36% bullish or 68% bullish or 72% bullish, which isn't sexy or exciting. But I'm showing here the individual daily extremes to show you how powerful this modality is. Now, it's very important in terms of interpretation is when this extreme sentiment occurs. And again, we'll talk more about this and integrating it with timing and with Gary's technicals. Let's look at a little bit longer time frame in the next slide. So we're just looking at a little bit longer history here, again, with more intermediate term sentiment. And as I'm sure Gary will explain later, as we look at a couple of different time frames of sentiment to get a picture of whether or not the short term is in alignment with the intermediate term. And again, you see here in general, you see some highs, absolute price highs on high sentiment. You see some divergence. You see some other things. Same thing with lows. You'll note that what's happened recently is that this measure of sentiment has gotten towards the low side, whereas the other sentiment, the very short term, has gotten high. This is a kind of divergence or confusion. These sentiments at the moment are not that aligned. That is reality. But just to show you, we look at these different measures of sentiment over time and diagnose them. Let's look at the next slide. Now, so for the moment, we've looked at this sentiment modality, the missing link of the markets. Now I'm going to talk a little bit about timing technologies, okay, and initially about trend duration, which is a modality that I invented, okay. But in general, I look at a matrix of different timing technologies, many things. In the simplest way, all technicals are based on the price bar. You know, that's like in biology and physics, everything is based on the atom or whatever. It's based on the price bar. And that the basic, if we want to go to a higher level in a way of technicals, you need to simplify. I mean, I've been in shops where some guy has 12 screens in front of him and they all have 20 moving averages on it or whatever. That's the opposite of simplicity, elegance, and intelligence. We want to simplify this, and one way to do that is through simply looking at the trending function of the market. Basically, bull markets have rallies that last longer than the declines. Very simple definition of a bull market and vice versa. So I look at what I invented, these trend durations or attention spans in the market, and how they may repeat or tell us something or not. There is no one timing indicator that always works 100%. So as I said, there's a number of things that I look at. In fact, what I realized after studying this for years is you're always looking for the Holy Grail. You're probably looking for the Holy Grail of trading, or that one technical system, or that one indicator that's going to make you love my gosh thing. The market has its own sort of enigma code, and it keeps changing some of these indications and indicators. So you have to be aware of that. But you have to look for the preponderance of the evidence. And I do that, and it allows me to derive a timing narrative, which I'm going to share with you in a couple of slides. So I develop what I call profiles for when the market is likely to have a move. That's timing, when. It's very important to know. What if you thought the market was going to crash? You've been thinking that for the last 3 months, and every week you put on that trade. You lost a lot of money because the market wasn't ready in terms of time to do that. Let's look at the next slide, and I'll show you very quickly something. Okay, so you see this is the S&P 500. What do you see? What's the trend? What's going on here? I mean, you show this to most people, and they're like, well, there's nothing going on here. I mean, what do you make? This is just crazy. There's nothing. You can't make any sense out of this. I mean, there's nothing going on. But this is the basic reality. You're looking at the reality of how the market is traded, not what people think it should do or shouldn't do. Now, let's go to the next slide, and I'll show you one of the ways I parse this out. Oh, this is interesting. What are these red lines? These red lines, except for the vertical, these diagonal red lines are trend durations. Trend durations, it's how long do certain trends last. So you can look at this and see that these diagonal lines, like what does it mean? What are they doing? Those are simply observations of the habits. And remember, habits are also errors, the errors of the market, whether it goes up or goes down. I'm just showing here that these rallies are very similar in terms of time. They're like 8, 9, 10 days. That's pretty interesting. So there's a way of looking at that garbage and studying it from the trend duration point of view. And it gives you a sense of when the market may end a rally in this time frame, the history we're living through. Now, what should happen, do you think, when a short-term trend like this is ending? You're going to get high sentiment because people fall in love with the market at highs. So you can use trend duration and other timing technologies in combination with a totally different lens, which is sentiment, the missing link, to refine the probabilities of putting on a trade. Now let's go to the next slide. Now I'm looking at a couple other things here. I'm looking at downtrends. This is the weekly S&P 500. You see 1, 2, 3, 4, 5, 6 diagonals to the downside. These are the durations on a weekly basis of how the stock market corrected. And again, you will see, you count them up, that they're very similar in terms of time. That's been a typical trend duration correction during this history that we're living through. So that gives us an indication where the market would be on any kind of decline. Now there's another part here which is back in October when we had the severe decline. That was into the black hole, which I call it. Gary will talk about that shortly. But what I want to show there that is quite interesting is another methodology we're just going to touch on for a second here, which is the trend duration fulcrum, which means that it's very important to look at how long corrections last, but also what happens after a low. How quickly does the market recover? And you see here that back in October, after that decline that happened from September into October 13th, the stock market came back very strongly and rallied for more time than it had gone down. What does that mean? Well, it told me and us at the time that that was just a correction in the bull market, because that's the way bull markets trade. They rebound from lows very quickly, and they go up for more time than they went down. Now, the one other point in here, I've just drawn a horizontal squiggly line just to show you that when you look very simply at this price history, what's happened in the last few months. The market has gone very, very flat, very, very flat after being in an uptrend. So that's very interesting and fits in with our forecast. Okay. Okay, let's look at the next one. Let's look at the next slide.
It's on, Woody.
Can you hear me?
Yeah, it's there. Do you see it?
Can you hear me?
Yeah, do you see the I put it up.
So I'm going to talk here about the market phases. This is a higher development in terms of time. As I said, I've spent 40 years studying timing. There's many factors. And ultimately, I try to get down to giving clients a sense of what to expect and what's going on. Now, there's a few things I've mentioned recently in the newsletter: the golden halo, the kill zone, and the black hole. Now, these can be of different degrees, and there could be multiple ones, but a golden halo is a time zone for a high. The market looks good and feels good, so you're going to see high sentiment at a golden halo. or complacency. And these patterns usually take some time to unfold. Now, the kill zone is a period when the market really breaks down. The cat is out of the bag and it's all black. This doesn't happen at a high, but it was a breakdown. Now, a black hole is the opposite of a halo. It's the termination of a kill zone. You get extremely low sentiment, a price panic, very negative headlines, and lows are very different than highs. They occur quickly. So these are a few different phases to look at. Now, one of the things that I'm talking about here is that it looks like we actually have a series of minor golden halos, including the June 22nd high and now the July 20th high, where things look really great. Market looked like it's making new highs. Technology made new highs. Greece is okay. China is okay. Everything is okay. You get some high sentiment, but you're also seeing divergence. Now, what I'm talking about in the newsletter, should you subscribe or whatever, to it is that there's a coming time frame for a kill zone where these golden halo phenomenon should wear out, and then would get into a black hole, just like we had a black hole last October 13th, which I predicted in advance. You actually had a minor golden halo September 21st. So this is pretty exciting. Black hole, that means you should make money on the short side. Everybody loves to make money on the short side. And we have some coming up. Now I'm going to tell you now, the black hole, we had a black hole obviously in August of '87. We had a black hole last year, which now nobody even remembers. But when it happens, it's a very important opportunity. So there's a black hole coming, and we will identify this ahead of time in the newsletter. Now here's the big news. There are 2 black holes coming. 2. Maybe one is not so black, maybe it's a beige, maybe there are 2 beige holes. The point is there's 2 negative magnets for price that will be coming. So it's going to be a very interesting market going forward. I thought today's trade was very interesting as well. So these timing technologies in all my studies give me an indication when the market is ready for a move. And sentiment can also give us an indication of that readiness of the market. But the timing is really, really critical. Now, I just tell you, there's nobody else who does this. I mean, I know. I've been around. There's nobody who does what I do in terms of the timing. Does that mean I'm going to be right all the time? Do I know exactly what the market is going to do? I do not. But this knowledge is very, very good, and it's very important. Then, as Gary will talk about, is he has an overlay from his own experience of what we call the regular technicals about how those can interface with the timing and sentiment technologies to set up potential trade.
All right.
I think that's the end of this first section, Gary.
Yep,
Okay.
is. Okay. So let me, I'm going to start off. Thank you for all that, Woody. And some of you, it's maybe a little bit hard to understand, but the one thing that I would have to say is I've been working with Woody for, almost a couple years now, but I've been following him for a while. And whether you understand what he does or how he does it, it's simply amazing the accuracy that he has. Now, as he had mentioned, things aren't going to go as planned all the time, but for a majority of the calls, they're really good. And what I've done is I'm able to use the sentiment data that's there, and then I'm just more on the technical end of things. And what the way that I do it is I combine the regular technical analysis with the sentiment as well as the timing profiles that Woody has. And this is, it brings it a little bit more into the layman's terms, because if we're expecting some kind of turn, say to the upside or the downside, we have that aspect of the equation. It should take place during this timing profile. So from there, the only thing I need to do is now watch sentiment. What is that doing, which we provide. And once that's lined up, now we start going into our regular technical analysis. We start looking for support resistance, technical divergences, and what it's able to do is kind of pinpoint where things should turn. So let me show you an example here, and this is the black hole that Woody was talking about. This was going into last September. Now, he was originally looking for that in August, and then when it came into the September 9th, I believe it was the newsletter, the dates that were put out were between September 18th and the 21st. So we knew going up into this bounce right here that we were looking for a turn down, and it was a black hole type move. We had the bearish divergences here, and if you look, we had a trend line that all we did is connect it together, and it just about pinpointed where the turn took place. And from there, everything just absolutely collapsed, and you pretty much just hung on to the trade until we knew when the black hole was supposed to end, and that was during the October 13th-ish was the time period. So as everybody was buying the moving averages or where support was, we knew ahead of time that don't even start looking for the any type of long trade until we got into this time period. And from there, we saw the S&P rally high. So from the expected turn on of the black hole, the S&P moved a total of 480 points in less than 3 months, and each one of them, you know, the dates that were predicted were pretty much spot on. So on a technical aspect, it really was not that difficult, because all we were looking for was, okay, the actual turn was coming here. Where is support? Well, if we turn or look at a weekly chart, here is the black hole. Drop down, here's support, and it was right into the time period. So everything matched up for looking for some type of long, and here's your long candle, and from there it was just straight up, and that's how we, you know, you can combine the technical aspect of things once, if you have the time and you know how people are actually feeling about the market, where at this particular time, everybody was bearish on the market. Nobody wanted to touch it. Nobody thought it was ever going to go up. We heard the bears saying that the market's crashing. But again, we knew that the turn was coming on the 13th. So instead of doing what everybody was doing, panicking, you were just gobbling up shares right here. And like I said, in a matter of less than 3 months, it was actually 480 points. Now that was just a black hole event. Now what I do is I'm actually, hang on one second, I think okay. So what I actually do with the reports now is we have our normal, you know, the timing profiles that Woody puts out, so we know the time periods when to start expecting a turn. But this is the intermediate term sentiment, and this is up to date. So as you can see right here, we had a very high sentiment right here. And if I zoom in now, so the intermediate, that's your swing trades. Those are the ones that you're not really going to be looking to trade in and out. You're going to get a decent sized move, and this one, the S&P moved 90 points to the downside. So we knew on an intermediate term basis that we had extreme bullish readings here. And now if I zoom in and just go to our normal daily ones, you can see we had a series of 90% bullish. So right in this area, everybody was bullish. We knew on an intermediate term, everybody was bullish. And now if we just go to the charts, what we do is you count 1, 2, 3, 4, 5. So the people that don't know Elliott Wave, it's not a big deal. You don't have to. But what it's showing you is, what it means is, once you get this type of move where you have 5 waves to the upside, you have bearish divergences on the technicals, very overbought. So the expectation was that we were going to get a drop that's going to retrace 78% of this. So we had the high sentiment, we had 5 waves up, bearish divergences. The short side was actually a very, very easy call, and this was the target. And if you notice, it's exactly where it came to, And then from there, we started getting a nice rally to the upside. So by combining everything together, knowing where sentiment was on an intermediate term basis, knowing where sentiment was on a short-term basis, just doing your regular technical analysis was able to pinpoint what you should be doing. It may not have been the exact spot on it, but you knew this rally here, the only thing you wanted to do was start layering in on the short side because everything was lining up for this move. And like I said, we dropped almost 100 points in a pretty fast manner. And if you're a swing trader, if you're trading options or something just on the spiders, you could have bought just 10 contracts of the spider puts, $2, $3 out of the money, and made a ton of cash on this move. So now what we're doing is we have the kill zone that is going to be, it's coming into play. And what we want to do is just see how the markets are going to start reacting to the actual weakness that we're seeing right now. Is it going to hold support? If it holds support, then all we're doing is waiting for the next timing profile to be able to say, okay, start shorting here, or when sentiment gets to extremes. But as Woody has explained to me several times, there's going to be a period soon that we're going to get what's called a wave 3 down, and we're going to have low sentiment. We're going to have everything, and they're going to get ignored because we're working into Woody's kill zone, and eventually, he can correct me if I'm wrong, it will most likely turn into some type of black hole. And now that he's saying that we have 2 of them, it's it's something you want to pay attention to. And hang on one second, I just got to move this over. So like I said, the last actual black hole that was there, it was this type of move, and it has made some traders, it would make their entire year to be in some type of move that's going to happen like this. And having someone like Woody Dorsey that's really one of the masters at market timing, being able to tell me when to expect this move, it helps me out personally on the trading end of it. I'm able to put my emotions aside. I know that if I'm getting into some type of trade and it's still moving in the opposite direction, you just want to continue to layer in, and you want to watch the technicals, watch the next support resistance. And this is really what we go over in in the newsletter. We're combining the timing profiles that Woody has, the sentiment data that Woody has, with just regular support resistance, as well as your divergences that are in place. And we're given a pretty good view as far as which direction you want to be looking. Now, we don't give actual trades or anything like that, but you know as a reader what to expect, where to expect it, and that's pretty much what has been playing out right now. So that's as far as on a technical piece, that's how I piece everything together with using the timing profiles, the sentiment, as well as the regular technicals. So Woody, did you want to add anything else on that?
Sorry.
Okay, let me do this. I think he may have didn't. So what we basically do at sentiment timing, I just got to have that thing there. So sentiment timing, we use proprietary sentiment timing tools to diagnose the conditions of the market, and we combine them with a regular technical analysis that isolates specific trade setups. If you're in the market, which most likely everybody is here, you want every trading advantage you can get, and the sentiment data, the important technical timing profiles, as well as the analysis, is something that you really can't get anywhere else. You can't go to any other website and say, okay, well, I'm just gonna use this for sentiment. The sentiment has to be, you have to interpret it and figure out what is going on, and that's where Woody is the best at doing that. So we allow him to make those types of calls, and then we do the regular technical analysis. And we have some very, very important dates that are approaching. And as Woody had said, we have the kill zone as well as a black hole. And like I mentioned before, you get on the right side of a trade of a black hole move, it can make your year, 2 years worth of S&P points in a very, very short time. And after that big move that we saw from the previous black hole in September, it moved into the December timeframe. And if you really look, the S&P has gone nowhere since then. So that's the type of information that we're providing. And what we're going to be offering for everybody that was following us on this, the expert roundtable workshop, is we want you guys to, like I mentioned, we have some pretty important dates that are approaching, and we're offering a 50% discount for all attendees here. And the only thing you need to do is just put in this, if you hit the join button, you can just type in roundtable, you'll automatically get the 50% off coupon. So unless Woody has anything else, Reed, I think we might be finishing up a few minutes earlier. Does anybody have any questions? We're open to answer questions as well. Not sure if, can you guys hear me?
Yes, I can hear you, and I can
okay,
go
sorry
ahead.
about that.
No worries at all. I didn't know if you wanted, if you were scrolling through some of the earlier
questions.
No,
you know what? I have the that bar thing that's for the go-to meeting that was right in the middle of it. Sorry.
Okay, got you. No worries at all. No worries at all. If you want to take the next 2 minutes, I do see there's some questions just came in, so you can.
Okay. No, absolutely. I don't see the questions. I don't know where. I don't know where they.
Do you see that on the actual dashboard itself where it has questions and then there's a plus sign next to it?
Yeah, I'm clicking on it, but I don't see any questions.
And then can you scroll down? Maybe it's because, well, no, you guys are both organizers and you're the presenter. So do you see any questions at all, or it's just completely blank, the entire question box?
The entire question box is blank.
Okay. Woody, do you see the questions?
Not.
I can actually read them out to you. I think there's like 3 or 4 of them.
Okay.
Sure thing. Okay, so this is one from Edwin. So he just asked how to measure sentiment.
Well, Woody, are you there to answer that? I'm not sure if maybe his computer went off on this, but basically when he says how do we measure sentiment, it's basically pulled from Woody has a database where people are every day going into the database and saying how they feel in the markets, and his computer algorithm then compiles all that information, and that's how he comes up with his sentiment data, and that's where we put out on for each one of our reports.
Okay, great. And then I have another one that says, does this work for Forex?
We really don't cover Forex. It's something we discuss, but we're not. We really just cover the S&P 500 in our newsletter and what we see going on with that, but we don't really do anything with Forex. I know Woody has put out a few things in previous reports about the dollar, but this is primarily the S&P 500 that we cover.
Great. I do have a question in regards to the promotion today. They're asking, is that a reoccurring 50% off?
It's the first month that we do it for all of it. It's all put on. You'll see it when they put it on. It's all labeled in there. So what we're doing is, instead of just doing our regular, because we don't give out any promotions. Everybody that signs in, they're paying the full price on it just because of the information that we give is it's very, very valuable. So what we're doing with everybody from the webinar here is we're giving the 50% off for the first month, and then if you decide you like it, then you would just go to the regular price.